Hello guys, Steven Dux here. Welcome to this video. So today I want to talk about the plans I'm going to trade in the rest of the year. As I talked about in the last video, this market has significantly lost its volume compared to 2021, 2020. Since 2020, we had this massive stimulus check that's pouring into the market, pumped up the equity markets, and there's tons of companies that's going up thousands and thousands of percent without any fundamentals. So those became already good shorting opportunities. But for now, the stimulus has been taken out of the market. The Federal Reserve is pulling out one of the most hawkish plan that they're going to taking out the liquidity of the markets. Definitely the play has, especially in the penny stock or small cap area, the play has been significantly reduced. You haven't seen bounce short, gap up short, dollar block. Those statistics will completely get changed once people start to adapt into this market. And right now we still have plays here and there. It's not like we don't have plays at all. So in the rest of the year, we need to work on very specific risk management and also be able to, I would say, come up with a strategy to trade overall market. And I understand there's tons of factors that's affecting the global economy and also affecting, how the SPY and the Qs perform. But overall, downtrend of the rest of the year, during QT, a market tends to go down in a general trend. So trading the overall market is completely different compared to the small cap. Normally you make your decisions in one go. So you take your entry and you exit by the end of the day or by the end of the next day. But for the overall markets, you kind of have to hold overnight and make sure that you give the stock specific range to give yourself multiple entries during different days. That's how you can average. That's how you can manage your entry, get a good average, and also be able to get a good risk management. So in terms of return trading the overall market, the return definitely will not be as good as trading penny stocks because small caps normally generate 50% or even 70% return in one day. For the overall markets, you are probably looking at 2%, 5%. If you're trading the TQQQs, that's 3 times the leverage. You can gain probably just 3 times more, and it will be no more than 15% in one day. So for those two different markets, they are completely different. But in the future videos, I will be able to dive in those ETFs and bigger caps. So my general thoughts is right now as a small cap traders, there's still tons of plays out there. Just probably gets cut 2/3 of the plays. So if there's 100 play in 2021, we probably have around maybe 20 to 30 plays in a year. But still, you can still be able to make tons of money by trading in the small caps. So here comes another strategy for the bigger caps. As you know that we had tons of speculations for Bitcoin. Then we had tons of meme stocks like Dogecoin, GME, AMC, and one of the bigger meme stocks but actually had fundamental is Tesla. Pretty much all of those overhyped tickers will get a significant drawdown and probably crash into zero if they have no fundamentals other than potentially Tesla. Normally in a bear market, resistance matters more than the support. So you can build your portfolio, I would say 50% into shorting those meme stocks that still has tons of room to drop, like GME, AMC. Those will drop to zero, probably closer to zero. Tesla will have a significant drawdown, probably more than 50%, until the Fed says something else. We're going back into printing money again, which I don't think they will do. And for all those meme stocks, be very careful, especially for the millennials, tends to go buy the dip. That's one of the main things for them in 2020. But right now, the liquidity has been pulling out the markets. So be very careful buying the dip. And in short-term technical analysis, you can buy the dip because shorts tends to cover and ride the market for a few weeks. But that's not going to work in a long run. So be careful with buying the dip, and a lot of people tends to promote that on YouTube. So one of the main things I want to focus, or you should focus as a beginner or you're trading in this market environment, is be very focused on your risk management. Do not risk the money that you can lose, because in this market, it's very brutal. You can notice that this market is coming after the millennials and coming after all of those investors that don't have discipline, they don't have risk management, and all those people will get wiped out before the market comes back. So that's my overall thoughts for this video. And let's dive in some few charts of what happened this week and what we can potentially trade into the next week. All right, so let's take a look at VRU. This ticker has been spiking for 2 days and gained about 100%. I haven't seen a ticker that's going up 100% in 1 day for quite a while. So this is the one that went up 100% in 2 days. It had resistance up in the April 18th and April 8th, which this resistance gets canceled by the volume that's trading above it. The price is trading above it. So the main resistance is around 15, and between 15 and 16 years, trading about 100 million volume. Quite aware in the 2021 markets. Going into the second green day, the stock consolidated throughout the entire day. So what you are looking for is going into Monday, probably spike the 15, test that 15 resistance again, then consolidate around 12 and before the final breakdown. So as long as the ticker doesn't break through 15, I think this will be a decent shorting opportunity in upcoming days. But just be careful, because this one doesn't produce enough range for you to short into. 100%, maybe drop to 10 max. Try and drop to 9. It's quite a stretch. So that's my thought on VRU. Now let's take a look at one of the other I would say meme stocks, GME AMC. This is getting completely destroyed from last year, starting in May. Dropped quite a bit since last push. I think I shorted it, the AMC in around 31 and covered it into the 20s. Didn't thought I can fade that far, but you can clearly see that pretty much all the meme stocks that got hyped in 2021 is getting completely destroyed. Same thing goes on to GME. So GME is holding better than AMC, but when either Bitcoin goes to 10,000, 7,000, all those tickers will probably get killed, going back to the single digits. And for future plan, I will say this market is definitely favor the short sellers into any pop. You can short into any pops as long as you can have a solid risk. Shorting into any pops, into parabolic spikes on those meme stocks that has no fundamentals. Those will be great opportunities for you to make money in this market. And in terms of buying, I would try to avoid that, because timing the dip in the overall market is extremely difficult. Try a small dip buy here and there, and track some data, but I wouldn't recommend buying this market. So that will be my plan for the rest of the year. Let me know your thoughts. Also, we have a conference upcoming in July, and we will put a link below for you to register if you want to come in and listen other traders to talk and how I traded in 2021 and what's my, I would say, more detailed plan in the upcoming future. I think it will be a really good opportunities for you guys to really learn from each other and also be able to have a solid plan going into the future markets, because we're shifting into a different age for this market. So that will be end of this video. Thank you very much for watching. I will see you guys in the next one.